Good morning, everybody, and this is your S&P 500 day trade setups for today. So, yeah, another big day down. Actually, quite a massive day down. We'll get the structure for you now, but yeah, ultimately that was the level we're looking at yesterday. We didn't quite reject off it. As I said to you, the oscillators looking rather dangerous in the position they were when we did the video. They hadn't crossed over like they've done now. But that's sort of just starting to roll over, both of them. And you can see, and often when they do that far apart, you have a fairly violent move, and that's exactly what happened yesterday. So let's just look at the logic here. First bit of logic is quite simple. We are in a downward trend. We are forming a series of lower highs and lower lows. So that is a clear, well-defined downward trend. What we're also trying to do here is form a higher, so if you look at it there, we're trying to form a higher low here, or we are trying to just get structure. So in other words, close the gap. The gap is closed now, and build a base off here for another move back to the upside. This to me is a first line that we need to cross, and that's 4100 or 4107. We need to get above that, find support there before moving higher to 42.57. But at the moment, 42.57, and I'd actually round that off to 4300. That's the area that we need to look at for us to say, okay, this madness to the downside has finished. So if we start moving down through, well, before we go down, let's just get to the weekly. So we do have a weekly level here, and that's why I say to you this is a fairly strong level, and that's at 4107 area. That does look like a rejection, doesn't it? And here's the previous week's low, which is 38.62. So if you look at it without any emotion involved right now, that is a pin bar. This is looking like an inside bar, although I'd prefer the inside bar to be in the body. But the other thing that it could be, the bulls could step in today or tomorrow and then drive this thing up for another pin bar, which could be a green pin bar. And that would give you a weekly tweezer bottom. Now, just bear one thing in mind. We're looking at this thing and saying, oh, big head and shoulders, big crash coming. There's a lot of negative narrative. And when everybody is sort of negative, you need to start looking at the opposite direction. It's the same as when everybody is bullish and saying it's never going to fall, it's going to keep going to the sky. You need to be very cautious and start expecting something to fall. So at the moment, my opinion is, there's so many stocks that are extremely valued. The NASDAQ is down something like 30%, I think. In fact, we can quickly look at that. So from the highs of last year to where we are today, 28.7% down. So tech stocks are down 28%, almost 30%. Yesterday was a 5% down day. And NASDAQ stocks, the big tech stocks, play a major role in what's going on in the S&P 500. So you need to pay attention to them as well. So for me, at which point do people start looking for value and start saying, wow, these stocks are cheap, we need to start accumulating? Bear in mind, dividends payouts are happening. So, buying a stock that was $100 and buying it at $60 or $50, that's a massive discount for the same level of dividends. If you think about it, you're buying 2 for 1. So instead of getting 2% or 3% dividends on a $50 stock, you're getting 2 or 3% on a $25 stock. So you can buy double. So therefore, you're doubling your dividends on your original price of the stock. But anyway, there's so much going on there. So there's so many people that are starting to rebalance portfolios, looking for value stocks, looking to build long-term portfolios. I'm one of them, and just looking for half-decent stocks that we can get in. So with all of that noise in your head, ask yourself, are we forming a range? Are we forming a double bottom? Or are we just forming a big consolidation area for a bigger break to the downside? And the narrative that the bottom is going to fall out and we're going to zero is going to play out. Okay, so much to think about. And that's probably why we focus on the lower time frames of the charts, because on a daily time frame, we can get ourselves some half decent little scalps. So gap has closed, I think. Make sure of that. Yep, we actually closed on the gap. Pretty solid. So that gap is closed. Look at our oscillators again. So yesterday they were grouped to the upside, and today they are pretty much starting to roll over here at the bottom. So obviously we want to see a crossover and get them back above the 20, and that would indicate a move to the upside. Now bear in mind what I said to you yesterday. When you see price action like this, so small body, bigger body, bigger body, bigger body, that is not conducive to a well-defined trend. That is more conducive to exhaustion coming to the downside here. Okay, and it's basically, people that are that were sitting long, and you're sitting long and you say, okay, I can hold. They don't have stop losses. Then all of a sudden, oh no, if it breaks here, then I'm getting out. And then it breaks there, and then they say, oh no, I'm going to hold it a bit longer, and then it gets down to down. They say, okay, no, I'm going to get out now, and they sort of get out at the complete wrong area, and then the market turns and goes against them. I think we've all been in that situation many times, and that's why you want to trade without emotion and make sure your stop's always in place. So big move, probability of a continuation, not that great. Probability of consolidation, fairly good. Probability of a gentle slide down to more structure, also very good. So me personally, I want to be short of a higher area. So I want to be short of 39.86. The trend is down at the moment, so that's the area. If we sort of get back and we start forming higher lows, then obviously the rate of changes and I start looking at something different. But for me, until we get above 41.07, there's no real opportunity for longs. You should be looking for you should be looking for opportunity to continue shorting. That's basically the bottom line. However, I'm very, very wary, and I suspect we're probably going to see either sideways or some kind of a bounce up. We do have a bit of data coming out today, so don't be too surprised if that data suddenly supports the market. This is all fear. Everything you see here is fear. And if you look at the successful long-term investors, if you look at Warren Buffett and a number of other people out there that are pretty rock solid when it comes to selecting stocks, they are definitely not panicking at the moment. They are looking for opportunities to buy, and that's kind of what you should be doing as well, long-term, that is. Anyway, let's just dissect yesterday. So there was no real rejection of a level. I was looking at this last night because I missed this completely. Was looking for these bits of structures. We broke through the structure, then looking for the retest, and we never got the retest. So the question in my mind was, what did we miss? And the only thing that we can actually see is on the 15-minute. You can see, I was going to put both these levels in, and then we can just zoom in a bit. Okay. Right. So there you can see there's the upper area there, and then let's do that. There's my lower area. So you can see all these fractals here in the zone. So we've got 1, almost 2, 3, 4, 5, 6, and then we found support there as well. So call that 7. So we had 7 interactions within that zone. Then in the morning we had 1 interaction. You can call that another one, you can call that another one, and then you can call that another one there. So it's 1, 2, 3, 4. Let's ignore those. So 5 interactions there with the moving averages pinned together like that. So yeah, the opportunity probably was here to take a stab at this. But if I just zoom out, so back to normal zoom, if you look at that while it was going on, what do you see? You see, well, they're still making sort of higher lows here. So this looks like consolidation, and we're going to probably drift higher. Didn't really materialize. We kind of broke the 155, but then not a decent retest, no retest of a level. That was really, really difficult to to jump in, especially for me with my strategy. So yeah, you can see probably worthwhile just paying attention to your 15-minute levels. You can see there, and then seeing what's happening with those. Can you see there's a break, a retest, but then back into that little area with another rejection, and then you've got this big break bar through there. So, and then you see a crossover starting to happen. So yeah, maybe hindsight being a perfect science is on the break of that was your structure, 250 point stop loss for at least down to here, which was a 800 point move. So difficult to call, but anyway, that's this kind of the narrative I was going through last night. What did we miss? Because there was definitely no entry on the hour. You're looking for a break of those areas. We got the break, but there was no retest. And the other thing is being above the 155 and the moving averages crossed like that, you would have expected a base to be forming somewhere on one of these tails for a move to the upside, which didn't materialize. Anyway, enough dissecting. I think this is the area to pay attention to, 39.86. If we reject here, another move to the downside. If we get above it and start building a base, then I suspect we're coming back into the zone again. So those are the two narratives at the moment, but hold on to your hats and keep your stops really tight. This is a massive area of potential consolidation that is brewing here, and I'm very cautious just jumping in on the short side down here. I'd want to be short higher up. Definitely not looking at longs. We are against the trend by going long at the moment. So that's kind of my view today. Hope it helps, bit long-winded, but lots going on. Quite interesting to see how this plays out. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.